Methods of compensation. Payroll is the process of paying employees for service or work performed. Payroll involves the calculation and record-keeping of amounts due to employees. Payroll is a big expense for most businesses. During poor economic times, many businesses will reduce their labor forces as a means of reducing expenses. This practice is commonly called downsizing. During economic growth, companies will do more hiring and increase their payroll expenses. The amount of time for which an employee is paid is called the pay period. The pay period may be weekly, bi-weekly, semi-monthly, or monthly. Bi-weekly means every other week. Semi-monthly means twice a month. When you receive your pay will depend on the pay period formula used by your company. Be sure you understand how often you will get paid and adjust your spending and budget accordingly. Gross earnings represent a full amount of earning during the pay period. Your gross earnings will be calculated based on your method of payment. You might be paid on yearly salary, hourly wages, piece rate, or commissions. Once again, be sure you understand how your gross earnings are calculated. Now let's look at the different methods of compensation. Salary is a fixed compensation paid to a person for regular work or services. At the time of your employment, you will be quoted an annual salary. Most professional jobs are compensated using the salary method. Wages refer to the earnings of employees, whose pay is calculated on an hourly basis. Usually, wages are computed by multiplying the hourly pay rate by the number of hours worked. Time and a half is when a worker is paid 1.5 times their usual hourly rate. It is usually paid as an incentive to work on a particular day such as Sunday or holidays. Time and a half is also mandated by the government as established in the Fair Labor Standards Act. A commission is a form of payment that is usually a percent of the business's profit or the amount of the total sale for a specified period. For example, in a retail store, the worker might get 10% of each sale made, or may be paid an hourly rate plus 5% commission on every sale made. Workers may be paid on commission basis only, or an hourly salary plus commission combination. If paid on a commission basis only, it must equal the current minimum wage of all hours worked in the pay period. When paid on commission basis only, workers can draw against future commissions. Piece rate payment is usually a price paid per unit of work. For example, in a manufacturing plant, workers are paid 10 cents per widget they make on a production line. The worker is entitled to minimum wage, however. So if the pay per piece does not equal minimum wage for the time it took to create those pieces, the business must make up the difference so the worker gets at least minimum wage for the time worked.